We proceed with bad debts. So for bad debts, usually bad debts are related with receivables, meaning what is bad debt? What's a bad debt? Bad debt is an expense recognized by a company in relation to its receivables that turned out to be doubtful for collections or simply put, uncollectible. Ibig sabihin, pag meron kang duda pa lang guys duda, hindi ka pa sure. You're not yet sure if there is if the receivable will not be collected. So duda pa lang, you're not yet sure. Okay? So if you're not yet sure na hindi siya mako-collect, you may have it first as an allowance. Okay? Gagawin mo siyang allowance. Diyan papasok yung concept ng bad debt. Okay? So again, bad debt pag doubtful pa lang for collections. So ganito yung parang picture ng bad debts. Nagko-collect na si seller. Sabi ni seller, hoy, utang mo, bayaran mo. Sabi naman ni buyer, ha? Utang? Kaya ba yun? So parang na nagbabaliwala na si buyer ng kanyang utang. So ibig sabihin, okay, parang magde-decide na si seller na baka bad debt na to. Hindi pa naman ako sure kung nagjo-joke lang siya sa kanyang sinabi. So pwedeng doubtful pa lang. Doubtful pa lang ang ganitong sinabi. Pero kung wala na dito si buyer, hindi mo na mahagilap, then that's the time na magiging worthless na yan. Okay? So commonly associated yung bad debt with doubtful accounts expense and uncollectible accounts. So any of the terminologies you're going to use, be consistent lang. They're just the same, but for record purposes, be consistent lang. So if you have started with bad debts, kailangan bad debts na yan all throughout. Pag doubtful accounts, kailangan doubtful accounts na yan all throughout. Okay? Ayan. So yung bad debt expense o yung doubtful accounts expense, yan, we recognize the bad debts expense or the doubtful accounts expense as part of the income statement o yung profit or loss statement. Since expense siya, debit yung kanyang normal balance. So yung normal balance ng ating expense is debit. Okay? But yung term na allowance for doubtful accounts o yung allowance for bad debts, okay, hindi siya sa income statement but balance sheet account siya. Yung treatment sa kanya is a contra asset account ng accounts receivable. So sa mga FS, makikita mo doon, below the accounts receivable, may nakalagay allowance for bad debts or allowance for doubtful accounts. Naka-deduction yan. Or minsan, pag net method yung ginagamit, yung ginagawa is pre-represent na lang yung accounts receivable, net of allowances. Then yung nilalagay na amount is net ng allowances. Okay? Yung normal balance ng allowance for bad debts or allowance for doubtful accounts, since contra asset account siya, if asset account is debit, then contra asset is credit. Okay? Contra asset. Kaya nga contra asset. Kasi yung asset, debit, contra asset, credit. Okay? So I hope nasusundan yan. That is a basic concept lang for that two accounts. So to recognize bad debts, we debit bad debt expense and allowance for bad debts. Okay? Or minsan, doubtful accounts expense, credit, allowance for doubtful accounts. Okay? Again, kahit anong gamitin mo, pwede as long as consistent. Okay? To compute with the ending balance of the allowance for bad debts, yung beginning balance, pagdagdagan mo ng bad debt expense for the year, then bawasan mo again ng write-off. Okay? Assuming we are using the allowance method, nagbabawas ka ng write-off because yung journal entry natin sa write-off is to debit the allowance for bad debt and credit accounts receivable. Kaya deduction po yung writing. Okay, then we have the ending balance of allowance for bad debts or doubtful accounts. Okay, so in relation with the computation of bad debts, tatlong method yung applicable dyan. We have the aging schedule, percentage of AR balance, and percentage of sale. Among the three, commonly applied yung aging schedule, and the aging schedule is most consistent with PFRS 9 kasi sa PFRS 9, sabi doon, for trade receivables, gamitin ang simplified method using the provision matrix. Yung provision matrix na sinasabi, good example is the aging schedule method. Aging schedule method. Okay? Again, among the three, aging schedule is consistent with GAAP. So aging schedule, okay, customers' accounts are grouped as to age in days past due. Yung requirement ng PFRS 9 for financial asset, example, yung trade receivables, okay, we have to group the receivables into age in days past due. Okay, age in days past due. Then after classifying each receivable into age in days past due, we have to multiply each age group with the related uncollectibility rate to arrive at the allowance for bad debts per age. Then later on, ito total na lang natin yan. Okay, later on, ito total. Okay? Aging schedule method is a balance sheet approach. Bakit siya balance sheet approach? Because the amount na na-arrive natin is an allowance for bad debt, which is a balance sheet account. Okay? Balance sheet account. Another clue, bakit siya balance sheet approach? Yung involved na account is accounts receivable. Okay? Then yung resulting figure or amount is also a balance sheet account. Okay? Balance sheet account. We have the accounts receivable and allowance for bad debts. Okay? So yung age in days past due na sinasabi ko kanina, okay, how do we account for the age in days past due? Okay? Titignan mo yung tinatawag na collection period. Okay? Kung yung collection period is within 30 days, hindi pa yan past due kung within 30 days pa. Pero pag naglagpas yan ng 30th day, okay? Pag naglagpas ng 30 days, okay, ibig sabihin, magiging past due na yan. Diyan magsa-start yung past due thing. So meaning, kung uncollected yung accounts receivable for 40 days na, that means 10 days past due na siya. Or from the 31st to the 40th day, 10 days past due. 10 days past due. I have an example. Sabi dito, Fabinto Company reported its accounts receivable as of December 31, 2019, grouped in age past due. Okay? Grouped in age past due. So yung 0 to 30 days, hindi pa actually ito past due. Not due yung tawag dito sa ibang presentation sa mga books. So yung 0 to 30 days, not due. Okay? Or yung iba kasi parang past due na rin yung nilalagay dyan. So ito, 31 to 60 days, we have 61 to 90 days, 91 to 120, and more than 120. Okay? Then yung 5%, 10%, 25, 50, and 75%, uncollectibility rates yan. Okay. Another guide. Okay? For problem-solving purposes, kindly take note with the rates. Kasi minsan yung binibigay is collectibility rates. Pag yung collectibility rates yung binigay sa inyo, okay, in 100% base, kailangan i-compare yung collectibility rates sa 100% to arrive with the uncollectibility rates. For example, yung 5% is uncollectibility rate. So for 500,000, yung collectibility rate niya is 95%. Yung uncollectibility is 5%. Same goes with 10%, 25, 50, and 75. Dito sa 10, 90 yung collectibility rate. Sa 25, 75 yung collectibility, dito 50, dito naman 25. Okay? Yung total ending balance is 1,200,000. Then yung breakdown per age group is eto. The company has zero beginning balance, the allowance for bad debts upon entering 2019. So sa beginning ng 2019, wala tayong beginning balance ng allowance for bad debts. Tinatanong tayo sa requirement 1, bad debts expense and the required ending allowance for bad debts. Then compute the net realizable value of accounts receivable. Then sa number 3, assume lang naman daw kung may beginning balance yung allowance for bad debts na 50,000, magkano yung bad debt expense? So yung solution natin, yan. So upon grouping, yung multiply siya with the uncollectibility rates. Yung 25,000, 35,000, 50,000, 50,000, and 37,500, these are the required balance of allowance for bad debt per age group. Yung 197,500 is the total allowance for bad debts. Yung 197,500, ito yung makikita mo sa balance sheet. Ito yung makikita, ito yung i-represent sa balance sheet. Yung 475, 315, 150, 50, and 12,500, okay? Yan yung NRV per age group. Pero yung total na 1,02,500 will be the total net realizable value. The total net realizable value. Pero yung makikita mo lang sa FS, yung 1,200,000 and 197,500. Or pwede rin yung 1,02,500 pero hindi ka nag-represent ng 197,500. So to answer the requirement 1, since zero daw yung beginning balance ng ating allowance for bad debts, both bad debt expense and allowance for bad debts will have equal amounts of 197,500. So sa journal entry, debit tayo ng bad debt expense and credit tayo allowance for bad debts na 197,500. Okay, 197,500. So yung allowance for bad debts na to ay ma-minus natin again sa total accounts receivable na 1,200,000. NRV will be the 1,02,500. Okay? Sa requirement 3, sabi sa requirement 3, assuming lang naman may beginning balance. Assuming lang naman may beginning balance yung allowance for bad debts. Magkano yung bad debt expense natin? So yung total na 197,500 will be our ending balance. So paano tayo makaka-arrive ng 197,500 kung may beginning balance na tayo na 50? So kailangan magdagdag ng 147,500. So sa journal entry, debit ka ng bad debts expense, credit ka ng allowance for bad debts, only for 147,500. Hindi yung buong 197,500. Okay, kasi nga dito yung assumption, may beginning balance. Okay? Next, we have percentage of accounts receivable. Yung percentage of accounts receivable naman is the same with aging schedule na balance sheet approach siya. Why balance sheet approach? Kasi yung involved accounts are accounts receivable and yung ma-arrive na amount is allowance for bad debts. Okay? Allowance for bad debts. Yung difference lang ng percentage of accounts receivable sa aging schedule, dito yung basis natin ng pag-compute ng allowance for bad debts is the ending balance. Yung total ending balance. Okay? Yun yung difference nila. So let us have this assumption. So assuming yung AR beginning balance is 200,000, may credit sale tayo, may collections, no write-off, no sales return, yung allowance for bad debts is 20,000, yung uncollectibility rate is 15%. Another difference of percentage of accounts receivable with the from the aging schedule, yung aging schedule marami yung kanyang uncollectibility rate. Pero dito, iisa lang yung uncollectibility rate. Okay? So yung requirement sa atin, assuming this problem, required ending balance at saka yung bad debt expense. Okay? So compute muna tayo ng ending balance ng accounts receivable. We use this 200,000, 500,000, and 400,000. So to do that, okay, beginning balance 200,000, add ka ng 500,000, then less ka ng collections, wala namang write-off, so yung ending balance natin is 300,000. 300,000. Okay, 300,000. So from 300,000, magmo-multiply tayo ng 15% to arrive with the required allowance for ending balance. 45,000. Okay, 45,000. Yan na yung ending balance natin. Yan yung ilalagay natin dito. So to compute with the budget expense, yung tanong, magkano yung magiging budget expense natin? Magkano yung idadagdag natin sa 20,000 to arrive with the 45,000 since write-off is 0? Okay, write-off is 0. So sundan lang yung solution na to. Yan na yan guys. Yan na po yan. Okay, yan na yan. So yung beginning balance, 20,000, kailangan po nating dagdagan ng 25,000 to arrive with the 45,000 ending balance. So sa journal entry natin, debit na lang tayo ng budget expense, credit allowance for bad debts ng 25,000. Okay? Yun lang yung difference ng aging schedule sa percentage of AR. Okay, the manner of computation. But they are both balance sheet approach because involvement of accounts receivable and the required ending balance, okay, or allowance for bad debt na balance sheet. Okay. Last is percentage of sales. Yung percentage of sales naman, in contrast with the first two method or approaches, income statement approach naman si percentage of sale. The fact na yung kanyang accounts na nai-involve is the credit sale or the sale on account. Okay? The sale. Sales, credit sales or sales on account, income statement account yan. Also, another clue. Okay? Yung na-arrive natin guys na amount is bad debt expense. Kung kanina, allowance for bad debts, dito bad debts expense, which is an income statement account. Kaya nga, income statement approach siya. Okay, income statement approach. Let's have another problem. Okay, another problem. So beginning balance 200,000, total sales is 800,000, cash sales is 300,000, and collections is 400,000. No write-off, no sales return, beginning balance of bad debts is 200,000, uncollectibility rate is 15%. Yung similarities lang ng percentage of AR sa and percentage of sales, isa lang po yung uncollectibility rate na ginagamit. Okay? Then yung requirements sa atin, bad debts expense, then the required allowance for bad debts. Take note yung sabi dito, yung sales should mean credit sales or sales on account. Because for purposes of bad debts, for accounts receivable, since accounts receivable is only arising from credit sale or sale on account, kailangan dun din natin i-relate si bad debt. But take note sa mga problem solving, pag sinabi sa problem solving na yung bad debt expense will be based on the total sales, sundan mo yung total sales. Pero kung hindi total sales, then deduct ka. Okay? Deduct ka ng cash sales. Since dito meron tayong cash sale, bawasan muna yung total sales ng cash sale. Yung credit sales natin will be 500,000. Then from 500,000, multiply ka ng 15%, yung maa-arrive is bad debts expense na 75,000. Yung 75,000, yan na agad yung i-add natin dito sa beginning balance. Okay? Then to arrive with our ending balance, 95,000. Okay? So, different talaga yung kanyang approach and manner of computation. At saka yung amount na unang na-arrive. So, sa journal entries, debit ka ng bad debts, expense, and allowance for bad debts credit for the 75,000. So, to summarize, okay, summary comparison of the three approaches. Yung nature ng approach, again, aging schedule and percentage of AR are both balance sheet approach, while the percentage of sales is income statement approach. The uncollectability rates used in computing bad debts, yung basis ng aging schedule is per age group. Okay? Dito naman sa percentage of AR based on average experience, pero yung percentage of sales based on average experience din. So dito, based on experience per age group, yung dalawa, yung percentage of AR and percentage of sales, average experience for all receivables. Yung basis naman ng multiplying uncollectability rates, sa aging schedule per age group, okay, accounts receivable per age group, si percentage of AR, yung accounts receivable na total ending balance, yung percentage of sales naman is the amount of sales or credit sales. Then the resulting amount, yung aging schedule and percentage of AR, both are required or ending balance for allowance for bad debts. But for percentage of sales, bad debts expense yung resulting amount. Okay? Always take note of that comparison. So, kanina, yung ending balance natin is 300,000. Kung i-compare natin si percentage of AR sa percentage of sales, since yung ending balance natin ng allowance is 45,000 for percentage of AR, NRV will be 255,000. But for percentage of sales, yung ending balance natin is 95,000, yung magiging NRV will be 205,000. Okay? So magkakaiba talaga yung resulting figures sa different approaches. Okay? Different approaches. Kindly take note of that. Okay, so for accounting for bad debts, yung pag-account natin sa bad debts, depende kung anong method ng presentation yung ginagamit natin, whether it is direct method or allowance method. Allowance method, mas common siya between the two. So ganito po yung ating difference ng direct method and allowance method. Let us use yung figures kanina na 1,200,000, tsaka yung bad debts na 197,500, at saka yung net realizable value na 1,02,500. Okay? So, balance of accounts receivable to be presented in the balance sheet. Direct method, yung direktang NRV yung ipipresent mo. But for allowance method, yung 1,200,000, yung makikita mo sa FS. Okay? Makikita mo sa FS. Then, yung net realizable value, the same lang yung direct method and allowance method. 1,02,500. Yung bad debt expense na i-report sa income statement will be the 197,500, both allowance and direct method, assuming walang beginning balance. Okay? Then yung allowance for bad debt na i-report naman sa balance sheet, since direct method tayo, magiging zero yan, wala kang i-represent na allowance for bad debt sa direct method. But for allowance method, may i-represent ka na 197,500. Bakit ganon? Bakit zero dito yung allowance? Okay? Bakit zero? Okay? Kasi dito, to record the bad debts expense, no journal entry tayo. No journal entry. But for allowance method, nagde-debit ka ng bad debt expense, then credit ka ng allowance for bad debts. 197,500. Okay? Meron kasing timing difference si direct method at allowance method. Si direct method, nadidelay yung kanyang bad debts. Nagre-record lang siya ng bad debts kung nag-write off na siya. Okay? Meaning sa direct method, focus siya sa write-off or worthlessness ng accounts receivable. Okay? Kung doubtful pa lang, wala kang entry kung doubtful. Pero si allowance method, meron. Pero kung write-off na, both direct method and allowance method, merong entry. But yung difference sa entry, yung debit mo sa direct method is bad debt expense, but for allowance method is allowance for bad debts. Yung credit, ganun pa rin, accounts receivable. Okay. So, write-off is related to mainly sa accounts receivable na topic if you're going to go through reference books. So, write-off is actually parang it is another level for doubtfulness or dun sa bad debt. What we have with accounts receivable, once an accounts receivable is determined to be uncollectible, okay, first there is a doubt. When we have a doubt for the collectibility of the receivable, we set up an allowance for that receivable. Then afterwards, if we're able to ascertain that that receivable is no longer collectible, then that's the time we can consider that receivable as worthless. Write-off is related to that stage of accounts receivable of being worthless. Okay, so worthless receivables, we need to write off that receivable. So for write-off, what is write-off? Again, write-off simply means removing the receivable from the record due to worthlessness. Problem solving will provide that that receivable or portion of that receivable is already worthless. Always take note, there is a difference between worthlessness and doubtfulness. Okay, so worthless receivables are different from doubtful receivables. Worthless means receivable is to be removed from the record, while doubtful and allowance account is set up for the doubtful receivable. Kumbaga, sa Tagalog, doubtful may duda pa lang. Worthless, wala nang duda. Talagang totoo na yan. Hindi mo na ma-collect. If a receivable is doubtful, okay, another difference when it comes to journal entries, if a receivable is doubtful, we set up an allowance. Okay? Always assume allowance method, okay, for receivables, because PFRS 9 for financial asset at amortized cost, example, yung trade receivables, we always set up allowance for that through the provision matrix, yung tinatawag na provision matrix. What's an example of provision matrix? Yun nga, yung aging schedule of accounts receivable. A receivable is doubtful, we debit bad debt expense or doubtful accounts expense and credit allowance for bad debts or allowance for doubtful accounts. That is if the receivable is doubtful. How about if the receivable is worthless? Under allowance method, we debit the allowance for bad debt or allowance for doubtful accounts and you credit the receivable account. For example, the accounts receivable. So therefore, if if you have doubt that a customer will pay you, or if you have doubt that amount, a receivable from a customer, there is a doubt for collection, we set up first an allowance account. Then, if you have asserted already that your customer will not pay, no matter what happened, hindi talaga magbabayad, okay? That allowance, that's the time na i-debit natin yung allowance, then credit their account receivable. Okay? So take note the difference when setting up for allowance due to doubtfulness and removing the allowance because of write-off. If we are using the allowance method, ganyan yung journal entries natin, and if the problem does not provide us to the assumption or method to be used in accounting for doubtful accounts or bad debt, we have the allowance method. Okay? Another method is the direct method. For direct method, worthless receivables are written off immediately. Take note what we have in the comparison in our previous discussion. If the accounts receivable, if the receivable is doubtful, we do not set up an allowance under direct method. Okay? By that, okay, because we are not setting up an allowance, we are not recognizing an expense at the moment that the receivable becomes doubtful. Okay? But upon determining or ascertaining that the receivable is already worthless, immediate write-off is needed. So that's the time we recognize a bad debt expense, then directly credited to a receivable account. Okay? For direct method, there is a timing difference in recognizing the expense. Okay? We only recognize expense if the receivable is worthless under direct method. But for allowance method, pag doubtful pa lang, doon na mag-recognize ng expense. Okay? Then upon ascertaining that the receivable is worthless, then that's the time we remove from the records the receivable by debiting the allowance and crediting the receivable account. Okay? I hope you are following with the difference between the direct method and allowance method. But again, okay, if the problem does not provide us to the accounting method, always assume allowance method. Okay? Okay. There is a question. Is there any chance or is it possible to recover or collect a previously written off receivable? So if we're going to answer yes or no, the answer is yes. There is possibility of recovery for the collection of previously written off receivable. And how do we account for recovery of previously written off receivable? Firstly, a journal entry is to reestablish the receivable account. How do we reestablish the receivable account? Simply reverse, okay? Simply reverse the journal entry that we have made when we had the write-off. Okay? So debit receivable account and credit allowance for bad debt. You are reestablishing the receivable account. Then afterwards, we took effect the collection. So we debit cash and credit receivables. That is how we account for recovery of previously written off receivables. Okay? If we're going to merge the two journal entries, we can just have debit to cash and credit to allowance for bad debt. Okay? So we are actually eliminating in the journal entry yung receivable na account. We reestablished first the receivable account, then second we took effect the collection. Okay? The good question now is that, is it possible that the previously written off receivables will not be collected in full? What I'm trying to say is that, for example, we have written off 100,000 accounts receivable. Is it possible to recover only half or 1/4 of that 100,000? It is possible na kalahati lang. Not necessarily kasi na yung recovery is full amount of the 100,000. Okay? Because that 100,000 might, yung composition ng 100,000 na yan, for example, maybe from other customers din. Like yung 100,000 is coming from 4 customers. Each customer composing of 25,000 accounts receivable. Just for example lang naman. Okay? So pwedeng kalahati lang or 3/4 or 1/4. Or pwede rin namang buo. It's up to the scenario ng recovery. Okay? Let us have an example. On January 30, 2020, FABM2 company ascertained that 5,000 worth of accounts receivable from customer A is worthless and need to be written off. However, in February 28, 2020, due to regaining the ability to pay, customer A decided to pay full of 5,000 on that day. The requirement is to prepare the journal entries for January and February. So what we have first in January is a write-off. So 5,000 write-off. Then afterwards, coming February, out of nowhere, because of regaining the ability to pay, customer A decided to pay in full yung 5,000. So ano yung maging journal entries natin sa write-off and recovery? Okay, so for January 31, at the end of January, our journal entry is to debit allowance for bad debt and credit accounts receivable. Dapat yung accounts receivable, actually meron pa yung dash customer A. Okay? So debit allowance for bad debts, 5,000, and credit accounts receivable, 5,000. Again, we are assuming here allowance method. Then for February 28, again, first to establish the accounts, the receivable accounts with debit accounts receivable and credit allowance for bad debt account. Then took effect the collection with debit cash and credit accounts receivable. Okay? Ayan. Simple as that. Yan yung accounting for write-off. Okay? Yan. Diba? Yung pinalimutan na talaga nila yung utang nila sa'yo. Be like, malas ka. Hindi na alas ka, malas ka.